Alright, Monday we start, yeah, and we just follow price as it goes, yeah. So Monday, obviously that we're asleep, but from 8 o'clock, price come bullish, and then here is basically the whole that whole Monday basically consolidates. So remember, this is 1 hour, yeah. So this is from 10 a.m. to about 4 p.m, yeah. And here we already know it's bullish, but the thing is, you could take the trade, but it would be like I want to wait for a better area to take the trade. Yeah, this one is like you're trying to chase it a bit, to be honest, because there, if I was the arrow thing, yeah, look from here, the bullish candle, the arrow. From here, I know the target is this one and then this one. Yeah. Do you see why I say them two? Is a high, is a high. We see them two. Yeah. But the thing is, those are quite close. Do you get? So the risk reward, that kind of thing, it would be a bit off. It won't be that. It would be rubbish, to be honest, because these is too close. Prices can already hit that too easily. And in crypto, I know it's volatile, so I want to aim for a bit, bigger trade. Why am I gonna waste my time on this little stuff? It's like the delivery driver on the Uber Eats. If he's getting jobs that get £5, why is he gonna take a job that's £1.50? Yeah, it's not worth his time. Because the time he spends on that 150 job, he might miss the £5 job. You can't necessarily directly apply that to this, but the same ideology thing. Yeah. So now price came there and it's starting to retrace. Yeah, this is part London session. This is coming New York session on Tuesday. Because remember, each candle is 1 hour, so one day is literally at 24 candles. So very easily, when I'm going through 5-6 candles, already half that day is gone. Whereas on the 15-minute, if I'm going through 5-6 candles, it's only like 1-2 hours. Yeah. So now we're going to Fibonacci. Yeah. So how we draw the Fibonacci is, look, obviously we're expecting a bullish trend. Yeah. Based on, of course, like the higher time frame. Look, if you look at the 4 hour, we're in bullish trend. Yeah, well, at that point, yeah, we're still expecting price to go up there. Yeah, I'll draw the lines for that later on, and we'll come to that. So I'll show you the 2 points where you draw the Fibonacci from in a bullish trend. So around here, New York time Tuesday, New York session Tuesday, yeah, pulling back. So when something pulls back, what do? We draw Fibonacci to find the retracement level. Yeah, that's just normal standard procedure. Yeah. Okay. To find out, because with the Fibonacci you can pinpoint where will retrace off, and the Fibonacci is based on number sequences. Yeah. And that also kind of blows your mind, because you think like you're not even basing it off any kind of resistance or support, but the Fibonacci, because these things are based on algorithm or whatever they say, that's why it always meets this kind of number stuff. It's not fixed what Fibonacci one it will do, but one of them you'll see will bounce off that. So actually, let me do the second thing. Yeah. So if we are here in price, yeah, that candle there, yeah, there, yeah. If we go backwards, where is your high? If we go candle by candle, where's the high that is clearly defined? You can easily see it in. Okay, and before that, the highest high there, fantastic. The one I said, this one is no, because that's not the highest one. This is the highest one out of that, even though that is right also. But I'm looking for the highest one, because we're doing Fibonacci from the exact high to the low. Not the,
okay,
you get? Sorry, yeah. Actually, it's wrong. I asked you the wrong way, to be honest. It's actually the high, not the high. Because this is a high. This is like a high as well. Yeah, you're right. Yeah. I'm looking at the highest of that. Yeah, so it's this. And Fibonacci, we're not doing the bodies, we're doing the wick to wick, because what is in the wick? The high is in it. Yeah. The high, and obviously the bottom of the wick is the low. Yeah. So if we from here, if we go back in price, where is the low? Clear defined low. Yeah, you're pointing at that one. Yeah. So then the recording sees what you're referring to. Yeah? So draw a circle there. So in an uptrend, we obviously the Fibonacci tool there. The first place we anchor it from is the low. Yeah. So if you see, it pulls out the dotted lines. Yeah. when you can you see those dotted lines? It's
yes.
like a plus, yeah.
Yes.
So you do that. So it's at the low. Can you see the low? It lines up with that lowest wick.
Yeah.
Click there once.
Yeah.
And you let go of the click, yeah. This is
Okay.
simple stuff, but because you don't know, yeah, it
Yeah.
might sound stupid on the recording. Someone else listens, but
Yeah.
and then you've just clicked it once. Look at the mouse. I'm not pressing it. I'm just move the mouse to the high. See the high is over there.
Yeah.
Move it to the side so I can see it clearly, and then you see it just taps there. It doesn't need to be exactly pinpoint. If it's like a little millimeter difference, it's not gonna, not that thing. Like look, I've done it like that. You see a little bit is poking out.
Yeah.
That's not gonna be the end of the world. Yeah. So don't think in real life like, oh, bloody, it didn't be exactly. You know what I mean?
Yeah.
No, it's not that deep. Yeah. And there, once you get it there, then you press the second click. Look, I'm gonna press the second click, and now it's there. Now it's not gonna move. If I don't press the second click, then it will keep. As I move the mouse, the Fibonacci thing will still move around. Yeah. And then obviously I'll just drag it out there so you can see the pullback. Yeah. Because can you see those levels? It comes out. Yeah. So you got the 3 levels. Actually, pull it there. Yeah? You've got a 0.5, which is 50%. 63%. That's a custom level I do. The traditional one is they call golden ratio 61.8. That applies to into different things in nature and everything like that. Golden ratio they call it, yeah.
Okay.
And that one is 786 apparently is in numbers is Bismillah or something. Yeah, that's also a Fibonacci number. That's not like I've added it in there. Yeah, 70. These are the 3 like key numbers, yeah, of the Fibonacci retracement. Yeah.
Okay.
And if you actually we'll zoom into it so you can see it clearer. Yeah, it's better to see clearer rather than in that you're trying to squint your eyes or something like that. So if we see, look at the 63% is that blue line, yeah, and look how price rejected all that. Obviously here it's dipped back, but generally the area it rejected was this 63 area. Yeah, it didn't go to the 78.6. Yeah. So obviously the way how they can trade is just straight put, obviously you've seen it reject here, you put your order in there right at the 63, and then obviously you can do a tighter Fibonacci, or you could say, if you see, look, can you see it? Look here,
yeah,
that last candle there, the wick.
Yeah, the bullish one, bearish one.
Last bearish candle, yeah?
Yeah.
If I draw a red candle out on the high of that, yeah?
Yeah.
That's why I'm doing the stop loss too, yeah? Because I don't want to do it right at the low, because I'm hoping for price to just fly through, yeah? And if it does hit the stop loss, and then it comes down there and rejects and goes up, then obviously I can get a better entry, yeah?
Okay.
Yeah, and then obviously the TP, we can use the Fibonacci numbers, which you got there, the target. This one is called retracement, and these ones is called expansion. Expansion meaning those are like the TP, people use it for TP. So the low TP you can use is 27%, 0.27%, yeah? They call that the extension, yeah? Fibonacci extension. The next extension is obviously the 100 or -1, yeah? So you can use them just straight, and even if you look over here, look, price at that 100, it rejected and came down. Crazy. It's not crazy, but like it's quite interesting how this stuff works, isn't it?
Yeah.
But now, if I'll show you how we can use the zones from the higher time frame to decide where we're going to take TP, yeah. And we're gonna do QBank style on this example of the trade for milk it as much as we can, yeah. So here we got an area of resistance in it, yeah. Can you see that?
Area of resistance, yeah.
Yeah. And yeah, we can probably put that as a round number of 155 actually, yeah. A round number was 155 there. And if we go to the 4 hour and see if it comes out nicer there. Okay, now let's look, we're going following the market. Look, that was your resistance, follow it there. That one is same as that, so no, so you gotta zoom out more. Okay, look here, what is there?
Yeah, resistance again.
That's it. So we're finding these for what? The TP. Like where can we expect price might reject, and if it rejects we wanna cut out. Or what we do is, if you don't want to miss out on catching the full thing, what you do once it rejects these supports or these resistances, close a little bit off. Say you got, say you put 1,000 risk down, yeah, or like even let's say small example, 100 risk down, yeah. So that resistance, once you hit that resistance, your trade was at like 150 quid. Instead of like closing the full 150 when you see rejection, you wanna hold it for the full thing, but you also don't wanna feel annoyed if it does pull back and then you lose out. Yeah. So when it gets to that resistance and it starts to little rejection, what you do, close some. So it was a 150 quid profit, for example. Yeah. And then what you've done, you've closed about 30 quid. So from that 150, 30 quid, which is 20%, you closed it. So you know I got 30 quid there. Okay. In the key. Yeah.
You wouldn't do like £100.
No, that's too, because if you want to try to milk it, if you close too much, then milking it doesn't benefit you because it's only little.
Ah,
only
so it's better to take the partials less.
Yeah, partials is small.
Okay.
No, and the main thing is because we're trying to milk it for a lot. So if we're trying to milk it for a lot, then we want most of it, not most of it, but more than
the bulk
50,
of
bulk of it still need to be running for us to financially benefit a good amount from it. But if we only leave 20% to run, then you know.
Yeah,
then it's not like it doesn't make financial sense. You know what I mean? Yeah. And then look, we follow price. Look, always follow price. Look, I'll even draw. Look, I'll do the highlight. Look. So I'll do the highlight. So from this resistance here, look, following. Actually, yes, cut that and do. Let's do like dark blue. Yeah? Okay, we're following price. Look, following price. Can you see the following price going down, up, down, because we're looking for the next resistance. Obviously none of that is the next resistance. This is not because it's lower, and there and there. Okay, that one is, and obviously now I've got to zoom out. Okay, there, look, price is consolidated there, and that we can do that as a little resistance for TP. I'm trying to mark out a good few of them, yeah, because we're not trying to milk it, isn't it? Yeah. So then again we follow price. Look, where's the thing? Look, the follow price. Can you see I'm following it? Follow. Oh no, look, what is that? It's high in it. It's resistance. And then look, we put a line there. I'm not doing it exactly. Basically to the bodies I'm doing it. Yeah, I don't know if you didn't realize that already. Yeah. And look again, look, follow price. Alright, it's going down. That's not resistance. Go up. Oh look, let's pull it back. That, what is that? Resistance, mate. What are we gonna do? We put a line there. TP, and obviously we follow the price again. Okay, this resistance is a little bit, it's only a little difference, but still we're gonna put that there. Yeah? That one there. Okay, pull it back, gone all the way up. This I've seen you identify that many times. Is a minor one, but that's just a minor one. Yeah, we don't care about that. Yeah, we're looking at these major ones which is clear. Yeah, so the next one is there, innit? Yeah, up there. And now we've reached 200 in price on Solana. So I think that's right, you know, maybe not. It's quite high. That's quite high, you know. Once we get there, then we look at the even higher levels, yeah. But for now, that all of these levels we've done should be enough, yeah. So now let's come back to our 1 hour, and you know this is how, you know, I said I used to be aggressive on trades, meaning say I had a trade of like 100 pips, yeah, but along the way I'd had more trades.
Because you're getting more and more confident.
Yeah, and not only that, I'm stacking. Yeah, and I'm stacking the trades. Like one pullback, another one, another nice pullback, another one. So one trade, the full analysis is only 100 pips. Yeah, but altogether from those trades I made, say the first one obviously 100 pips, then another one you done 50 of that 100, another one done 30 of that 100, last one done 15 of that 100. So 100 plus 50, 150 plus 30, 180 plus 15, 195. So I turned a 100 pip trade, I profited 195 pips from it. You get? So I nearly squeezed double out of it. You get? Yeah. So that's how you strategically, obviously you have to put your head on and do it properly, otherwise it can go pear-shaped, yeah. And you have to be prepared to, like, if those don't go well, then you cut your losses, you know what I mean. Don't hold them out because you'll rinse your account now, yeah. But strategically, again, you should do it in it. Like if you do, like say you do your normal one is 1% risk, for example, yeah. or say like we're doing normal examples. Say you're doing 5% risk, like that example I gave you, yeah. And those other ones you just do 1%, 1% risk, because 1% risk is not the full 5, and if it goes pear shaped and you close all of them, it won't be a big loss. But if all of them you done 5%, 5%, 5%, and if it goes pear shaped, you'll be in a tough position because you lose a lot. But the main one, 5% risk, those other ones you just add 1%, 1%, 1%, and at the end of it, you financially benefit extra a lot more. You get it? Yeah, so now look at this trade, yeah? Fantastic trade. Let's go in the 15 minute roughly, yeah? 15 minutes. So, do you see how we use the different time frame? We're going to the 4 hour to draw what? Just now we drew those blue lines, the resistance, what like time frame?
Resistance levels.
On what time frame?
Well, we went 4 hour.
4 hour. But at the beginning, what time frame were we on?
We were on the
1 hour.
1 hour.
1 hour. So do you see how we went from the 1 hour to the 4 hour to draw those zones? Because on the 1 hour, you're just zooming out too much, and then the 4 hour, you can see them quickly as well, and the high time frame as well. And you see that, we were talking about earlier on the high time frame, the zones are more like strong because a lot more money needs to do it. Yeah.
Yeah, considering
So look, this trade we took, we didn't take that much a drawdown on the trade. Alhamdulillah, fantastic green. Obviously, we're just holding the trade now. We can just do that later. Look, we're holding it. Obviously, I'll add that. I'll move that later. But we're still in the trade, for example. We're still going. Obviously, now this is night time. You're there in the night, anyways. Now let's go to the 1 hour, and you see the market is pulling back. Yeah.
Yeah.
Okay. So now we think, shall we do another Fibonacci and see if you can get another entry? Yes or no?
Yes.
Yes. You want to make more money or do you
Yeah,
want to see?
yeah.
Alright. So
all day long, mate.
So your from when price is coming down here, where's your high? If we go backwards, where's the highest high in there?
If we go backwards, is there.
No, the high.
There.
That's it. Yeah. And if you go down there, where's like your low?
Well,
no, remember we're here in price.
Okay.
So if we choose that at the low, then
then it'd be here.
That one, yeah? You're putting that one just for the recording, yeah? So we just put a circle there. So do you remember how we draw the fib in the bullish? We're in bullish. Where do we click first? The low or the high?
The low.
At the low, yeah?
Yeah.
Obviously, if you just click it anyway, it's not going to do it for you.
From the low to the high.
You go to the low there.
Yeah.
Click it once.
Click it once.
You let go.
Yeah.
You don't drag it. You let go.
Let go.
And just move the mouse up.
Alright, yeah.
And go to that high. Obviously, we drag it out to the side so we can see those levels nicely. Can you see how you can see the levels nicely? Yeah.
Yeah.
If I move it there, then it gets hidden by the candles. You get it?
Yeah.
Move it to the side
so you can see that number.
And then can you see the high is to the high there? Yeah.
Yeah.
And then you click it one more time, and then now it's done there. Yeah. Okay. So in this one, if we go to the even time is okay. Sometimes if you go too small time frame, then because you're seeing so many candles, it might affect your judgment because you might think, oh, it's going the wrong way because 15 minute or 5 minutes producing so many candles, but the 30 minute it takes a full 30 minute. You know what I mean? Less for you to get changed. You know your view on it or whatever you say. So here, this one, it initially it rejected off that 63%, because look, if I drag that box to the right, what level is it corresponding to? 63%. Yeah, they call it 63%. But then obviously the market went down further, yeah, to 78.6, yeah. But 63 is a nice number, so it's a nice level on the fib, yeah. And we just bang in an order and take a trade off there, and even though it pulled back further, it doesn't matter because we're putting our stop loss like below anyway, yeah. So if we do that same thing again, you see the last bearish candle, there, and you see the wick, the high, there, and if I draw that out there and pull the stop loss up to there, if it's quite tight, close call there, yeah. but we're done alright. And again, we hold that trade, yeah. It doesn't wherever it was, yeah. So price, we're following price. Now it's come to, obviously crypto isn't closed, but we started on Monday. Now we're on Friday, which is only 2 days ago, yeah. Following price.
Still going bullish.
Alright, it's come to your first level. 74 is rejected. If you took some profit, you took some profit. If you want to show you got the big monkeys, then you hold it through. And then okay, and now it's coming back to live market, yeah. But if we do, if we go to that trade, the 2 trades, yeah. If we just even take it to the current market, yeah, that is basically about, let's just say 10 USDT, yeah. 10 USDT. That's the second trade, yeah. And the first one, bloody hell, that's about 26 USDT. So 26 and 36,
50.
no, 26 and 10.
26 and 10 is 36.
36, yeah. If you're doing leverage of like 100 coins, yeah, 100 Solana times 36 is 360, innit? If you're doing, no, I'm wrong, sorry. If you're doing 100 coins with leverage times 36 is 3,600, not 360. If you're doing 10 with leverage, 10 Solana coins, which is less, it's 360, which is still relatively like whatever your float was, is good. And now with the 100 Solana with leverage, 3,600, and obviously if you're in a bigger level, 1,000 Solana with leverage or whatever it is, yeah, then 36,000. Or even 300 Solana, yeah. 300 Solana is 36 times 3 is 9,612, 18, 10,800. And that is from Monday until basically Saturday right now. Because crypto is 24/7.
10 grand in a week.
10 grand in a week. And 300 Solana, you can probably do that with 10 grand float, let's say. And you just double it. But because of this milking thing we done as well. Crazy.
Right.
And you see how we broke it down though. Look, so then we added all these things together, yeah. Your Fibonacci, your support and resistance, basically, and then the QBank style following it, and obviously this is also market structure as well, isn't it? Look, your high.
Yeah, high.
I'll come and mark it for you, yeah. Look, we'll do the boxes of market. That's your high. There. Let's put the tool to. That's your low there. Obviously there is extremely bullish, but then look here, there's your high, and they already marked out the low. There's your next high, and then that's also that's also your high low, and then here is your high there, and then that's your high low. And then there's done like a high as well, but it's lower than that one, but still it's a high. And then here it's done a low, which is actually broken this one, yeah. But still, that could just be like normally said, it could just be a minor thing. So on the overall picture, if it breaks this one, then we might say okay, it's bearish. But we do that thing where Bernie says as well, and QBank says, if it comes down here, then it needs to retest and then go down. And if it retests, then we know okay, it's going bearish. If no retest, then it could come back up. Like if we use the example of look here, this low there, price broke through it, innit?
Yeah.
But if it doesn't retest it and keep going down, let's delete that. If it
broke it, retested
if it broke, sorry, it broke, but if it just goes back up in again, then it didn't really break the structure. It's just like a minor thing.
Okay, and so far it's gone. The next candle was bullish, so
yes.
you never know. It might just
and even the current year, the candle is bullish and looks like it's gonna go flip up.
And it's on the 1 hour as well, so it's a bit more of a stronger confirmation, stronger candle in it. So
look, so we've done the 3 things in this video or whatever. Look, we just marked out your market structure for you. Those blue lines is your support and resistance, or your resistance, because we're looking for bullish from the 4 hour. And then we also drew the Fibonacci 2 times as well. And then that's like a whole breakdown of a trade. And because crypto is 24/7, look, this is basically a whole week right up until literally now. And this is a breakdown of a whole week. You could have just one asset. You don't need to trade different assets or whatever. You stick to that and follow it through the week. Take your trades in and out. Or, add more onto it, hold it, whatever. Just sit in the whole week. But the main thing is you gotta have the sabr for the whole week. Many people here like, oh, that's it, bro. I'm cutting. That's it. Relax. Then you would have got that 10 grand. You'd have got 2-3 grand, whatever it was.
So you have to know when to stop and when to not stop.
Yeah.
It's another tough one, man. Very emotional.
It's like that Tom Hogarth says, isn't it? If you can conquer the emotion, you'll be a bad boy trader. It doesn't matter if you use the most basic stuff ever.
Yeah.
And you could be technical analysis genius, yeah. But emotionally, you're not under control. You'll be the crappiest trader ever. And you look at next guy who's using simple resistance and support, and he's a multimillionaire, and you think, what flip? You know what I mean?
Wow, man.
And it's also the higher time frame. It's like that example we said many times. Is if a 5-year-old told you there's a tiger walking down the road, you say, all right, you're great. But if a 35-year-old says, oh, there's a tiger walking down the road and he's a mentally sane person, then you'd be like, you know what I mean? Flipping. It's the same thing with the time frame. The higher the time frame, it's more reliable. Look at those line resistance I put, yeah? This first one, it just broke through it clean. It didn't even it didn't even reject it. Second one broke through clean, but then it came back and done a nice little retest of that.
Yes.
Yeah. Obviously it dipped below, but nothing is exactly pinpoint ABC 1 2 3 in trading. Is a bit of
order flow is different.
You got not order flow. What is it? You gotta have a discrepancy. Like if someone said, oh, if it doesn't exactly come to that blue line resistance, can you see the blue line resistance going through, then I'm not gonna go through. I'm not gonna take a buy whatever it is, But look, see, it dipped into it, but still generally is rejecting that level. Do you get it?
Yeah.
And then look, now we go up to that next level we drew on the resistance. Look, it rejected that.
Came back down, then went back up again.
Second time it rejected it.
Yeah.
So do you see how there's support and resistance on the high time frame? That's a 4-hour resistance. All of these blue lines are 4-hour resistance. How I respect those higher time frame ones. Whereas if I put a 15-minute one, look, I'll just go to 15-minute and put look, all of them, it just cuts through all of the 15-minute ones. Look, there's a little resistance here, cut through it. We do a little resistance here, cut through it. Little resistance here, obviously it's pulled back. It's rejected a few times, but here it's just smashed through that. Little resistance here, it's smashed through that. You get? Well, this is how you take the trade, isn't it? When it's pulled back and then it's going up, get in your trade. Look, it's pulled back, get in your trade. You know what I mean? But obviously sometimes, like say here, you got in, it might go deeper pullback, innit? So that's why you have to be a bit more strategic, get a better, nicer pullback. If the pullback is a bit, what did they say, shallow? Is it called shallow? Like less deep, it's quite short. Then it's like there's a chance that it could go more pullback if I enter. So I have to be willing to take a loss on that trade, even though my other trades will be winners. But basically, why I'm gonna take the loss is because later when it does the actual continuation, I'll jump in again. But you mentally have to be like, I'm prepared to take a loss because in case the market pulls back more deeper, then I don't want to hold it in big drawdown. I'd rather just take the loss, and later when it continues after the end of the pullback, I'm gonna get in. I'll show you the example here. Look, like here, pull back and it started going up, yeah. Now look, I put position there, and we say we take the trade, yeah. So and that low there, we put the stop loss a bit lower, like 2 or something there, yeah. And then obviously it did go in profit actually, went to profit there, but then it pulled back and took it out. But it's not clever to have the, do a humongous stop loss like that. Do you get?
Yeah.
Do you not think it's better have the normal small like stop loss like that? Take the loss if it goes for a deeper pullback, but what you're aiming to do is get in again, innit?
Yes.
Look, now
cut the losses on the first one.
Yeah.
And re-enter.
And then now, like, it's like even in this bullish, obviously that's one too big, it's big bullish kind of, but even just say we enter off that, yeah, you got stop loss, see the low there, you got the low there, because in case it can pull back more, and then you're catching that whole thing, double 1 to 2 risk reward or whatever, yeah. Even this one we done normally, look, the risk reward on that is 1 to 3.94, 100 quid risk for 394 gain, or 1,000 for 3,940, and the main trade, that's 1 to 8, 1 grand risk for 8 grand gain. That's like, what I mean? It takes, if you're doing 1 grand risk every trade, after this trade you'll have to lose 8 trades one after the other to lose all of that profit. That's like, you have to be like a absolute idiot to do that, yeah. If you still trade properly, logically, whatever, this time, without getting emotional, you will not lose that whole 8 grand. You might lose like 2 grand or whatever, but then generally you'll be going up in it.
Oh, yeah.
But that one trade, if you're doing these trades where the risk reward is big and you try to squeeze it, every time you take a good trade, your account grows by a lot. Like if this was a 10 grand float, now you're at 18 grand, plus that other one, 3.94, you're sitting at about 11, 12 grand plus. So that's 10 grand to 22 grand. And now slowly you build your account to 3, 4, 5 grand, 4, 5 grand, 4, 5 grand like that. Once you got like a 50 grand float, even at a 25 grand float, what I mean? You can comfortably do 1 grand risk a trade, and it's not like pushing too much on your account. It's alright. And plus, if you're doing a 1 to 3, 1 to 4, 1 to 5, you're getting 2, 3, 4, 5. If you're doing a 1 to 8, and on this crypto, you can catch something like that. Yeah. Even say a 1 to 4, yeah, 1 grand risk to get 4 grand. That's a whole month's wages. You do 2 of them, 1 to 4 times 2 in a month, in a whole bloody month. Yeah, that's 8 grand. That's amazing monthly wage. Over the year, 80, 16, 96 grand.
Aye.
Oh, crazy, innit?